Welcome to a deep dive into one of the most controversial companies of our time, Tesla. Buckle up, it's going to be a wild ride. The recent third quarter earnings report from Tesla has sparked a fair amount of discussion. The revenue clocked in at $23.4 billion, a mere 9% increase year over year, missing analyst estimates by a cool $790 million. Quite a departure from the 47% growth seen in the second quarter, wouldn't you say? This quarter marked the first time in 3 years that Tesla's growth dropped to single digits. Now, if we turn our gaze to the automotive revenue, it grew even slower, a 5% increase to $19.6 billion. But it's not all gloom and doom. Model 3 and Y deliveries increased by 29% year over year. However, on the flip side, Model S and X deliveries declined by 14%. Tesla's numbers may not be as impressive as anticipated, but their market share tells a different story. Tesla's market share is growing, but what does this mean for the company's future? Tesla's reach is expanding, with market share improvements seen sequentially across all regions. However, a noteworthy wrinkle appears on the surface of this success story. Despite the overall growth, Tesla's China-made EV sales have slid by 18% year over year in November. While automotive revenue growth has been slower, up only 5% year on year, other sectors within the company have seen more significant growth. The services and other revenue segment, for instance, increased by 32% year on year to a sum of $2.2 billion. Meanwhile, energy generation and storage revenue saw a 40% year-on-year increase, amounting to nearly $1.6 billion. Now let's talk about Tesla's profitability and margins. While it's true that Tesla's profitability and margins have been on the decline, it's important to put this in perspective with other major automakers. Tesla remains more profitable and has a higher return on invested capital than most of its competitors. This is where the company's strategy becomes clear. Tesla is willing to sacrifice short-term profitability for the sake of long-term growth and value creation. But as with any strategy, there are risks. The automotive industry is fiercely competitive and rapidly evolving. Tesla's ability to maintain its market leadership will depend on its ability to continue innovating, improving efficiency, and delivering high-quality vehicles that meet consumer demand. Even with declining profitability, Tesla remains a market leader. But how long can it maintain this position? Only time will tell. Tesla's journey is far from over, and the road ahead is filled with twists and turns. But one thing is certain, Tesla's story is one to watch. The stock market is a fickle beast, and Tesla's recent performance has been a roller coaster. Like a daring ride on a high-speed track, Tesla's stock has seen its fair share of highs and lows. Investors have been on their toes, reacting to every twist and turn. Elon Musk, the charismatic CEO, has stoked the fires of speculation himself. Making a bold statement, he claimed that Tesla should be worth more than tech giant Apple and oil behemoth Saudi Aramco combined. This assertion, audacious as it may be, has thrown the market into a whirlpool of volatility. Investors, analysts, and market watchers have been divided. Some are standing by Musk's side, echoing his bullish sentiment, while others are more skeptical. The company's recent reporting of lackluster third-quarter earnings, missing analyst estimates, has certainly added fuel to the fire. The market's reactions have been swift and varied. Tesla's shares have come under pressure, with investors weighing the company's delivery targets and revenue against its ambitious valuation. Yet, despite the scrutiny and the debates, Tesla's stock continues to hold its ground. Tesla's stock value is a hot topic of debate, with some analysts claiming it's overvalued. Let's delve into this. Is Tesla's stock overvalued, or is it a reflection of the company's future potential? That's the million-dollar question investors and analysts have been grappling with. Take David Traynor, CEO of New Constructs, for instance. He's of the opinion that Tesla's stock is significantly overvalued, asserting it's worth closer to $26 per share, a stark contrast to its current standing. He bases his argument on a few factors, one of them being Tesla's gross profit margin, which has seen a decrease to 18.1% in the second quarter due to price cuts. Traynor also raises questions about the company's production figures. Despite Tesla delivering a total of 435,000 vehicles in the third quarter, up 27% year over year, Traynor believes Tesla would need to ramp up its return on invested capital significantly to justify its current stock price. On the other side of the coin, we have analyst Dan Ives, who remains bullish on Tesla. He compares Tesla's current state to the early days of Apple, when it was just beginning to monetize its services. Ives sees Tesla's current market position as a stepping stone to greater heights and believes that it's paving the way for a future where electric vehicles are the norm. So, is Tesla overvalued? Well, it's not a simple yes or no answer. It all boils down to perspective. If you're in Trainer's camp, you might see Tesla's stock as overvalued based on current figures. But if you're siding with Ives, you might see Tesla's value as a reflection of its future potential. Whether Tesla is overvalued or not depends on who you ask. The truth probably lies somewhere in the middle. The debate continues, and only time will tell who's right. Let's quickly recap what we've discussed about Tesla. We delved into Tesla's third quarter earnings report, which showed a revenue of $23.4 billion, marking a 9% growth year on year. Despite this, Tesla missed analyst estimates by $790 million, a detail that has sparked much debate. We also examined Tesla's market position. Despite a slowdown in the growth of its automotive revenue, the company continues to improve its market share in all regions. However, the decline in China-made EV sales raised some eyebrows. In terms of stock market reactions, we saw a mixed response. While some investors felt the pressure as Tesla cut its vehicle delivery target, others remain optimistic about Tesla's long-term value creation. Lastly, we discussed the ongoing debate about Tesla's valuation. Some believe the company is overvalued, while others, like analyst Dan Ives, remain bullish, likening Tesla's trajectory to Apple's early days. Tesla's future is as electrifying as its cars. Whether you're an investor or just an interested observer, stay tuned to see where this journey takes us. And remember, if you enjoyed this video, don't forget to subscribe for more insightful content.